wonderful day today. I want to give you a quick video. I'm just on my drive over to the HQ, the Wealth Dynamics headquarters, and I wanted to talk to you guys about the post that I had yesterday about the negative interest rates in Denmark. Okay, so it's official. Denmark is leading the pack right now. One of the first countries to have banks offering negative interest rates by negative 0.5%. Okay, which means that if you were to go take out a mortgage in Denmark, you would actually get paid 0.5% to use their money. Sounds ridiculous, right? So what does this mean? I think about like when I was a kid. I don't know if you guys ever knew this kid when you were little, but when I was a kid, there was this little kid that we used to go to his house, and we would like have like yard sales, like play yard sales with his toys, right? And he didn't understand that, when you bought toys from him, you were supposed to give him money in exchange for the toy. So he would always give you the toy and some money. So like you had a Tonka truck, and you're like, his name was Brian. It's like, Brian, I want that Tonka truck. And he's like, sure. He's like, I'll sell it to you for 25 cents. And you knew that meant that you were about to get the Tonka truck and a quarter for free. That's what it was like. That's what this negative interest rate thing is like. Okay, so like right now in America, you borrow money, you probably pay 3-4% for that money on a mortgage, and the bank charges interest, and that makes sense. And you deposit money and the bank pays you interest, and that also makes sense. However, with this, what we're saying is the bank is giving you interest to borrow and charging you interest to deposit. It's completely opposite. And here's why. This is the reason why that happens. It's because of the central banks and their monetary policies. Central banks, their goal is to continue to earn interest on the dollars they give to the treasury of a company or of a country. So the central bank controls the money supply. When they give out money to a country, they earn interest on those dollars, so they're incentivized to continually print those dollars. Now that devalues the dollar, and ultimately it causes economic recessions and depressions, and the way that the banks and the government try and avoid that is they lower interest rates even more to try and cheapen the money supply to incentivize consumers to go out and borrow and spend. And so think about when somebody is trying to convince you to do something, like spend money, which shouldn't be hard to convince somebody to do, but it's to the degree that they're going to pay you to spend your own money. That's called government subsidized money. I've never seen it before in our country, and I think we're about to have it happen for the first time. So basically, the indicator is showing that the economy is in the crappers. The banks know that. The central banks know that. The government knows that. That's why they're keeping rates so low. That's why they're continuing to go down nationally and internationally. And actually, Alan Greenspan used to be the chairman of the Federal Reserve Board. He recently stated that he believes negative interest rates are about to come visit the United States of America as well, which means the same thing would happen. We've never had negative interest rates here before, but the same thing would happen to us. We would have negative interest rates where when you borrow, you get paid, and when you deposit, you pay. That's what it would be like. Now, that's gonna disincentivize saving in banks, but it's gonna incentivize borrowing. So they're trying to keep people from hoarding cash because they know that we're heading into a deflationary period where the consumer is going to want to save their money, but nobody's going to behaviorally save their money if they know it costs them interest to do so. And people are going to continue to get into debt if they know they can get paid to get into debt. Right? So that's really kind of like the mindset behind it. Now, what does this mean for you as a consumer, as an investor, as somebody that's trying to create wealth? That's what this video is about. I want to teach you how you can take advantage of the negative interest rates that may be coming our way. Now, when a recession happens, like a true recession, the GDP drops for at least 2 quarters in a row, so that's at least 6 months. And during that period, a lot of times we see real estate can go down in value, stocks always go down in value, and sometimes we lose jobs, businesses go under, or they just lower their revenue and they have to sell. Like, there's all sorts of opportunities that come up. Now, you might not have the capital to take advantage of those opportunities. You may not have saved cash. Okay, like if you weren't doing your due diligence like I teach, and you weren't saving 40% of your income before the recession happens, you're probably not in a position to partake in any of the goodness that's about to happen for you as an investor, which sucks, but that's the fact. Now, the way that you can still partake, if you would like to, is if you have a good credit profile and you're not overextended on loans and you don't look like you need money, and you can go qualify for loans at a negative interest rate. If that happened, what that means is if you have an excellent credit-worthy status with banks and with lenders, you can go to them and say, hey, I would like to borrow money at negative 0.5%, meaning you're going to pay me to borrow your money. And then you're going to take that money and you're going to go buy assets that are devalued. They've dropped 30, 40, 50%. Okay, so you basically took nothing, got paid to take the nothing, and bought things on sale that are going to pay you cash flow and cover the rest of your debt payback. That's the beauty in the interest rates. But you can't do that if you've got debt. You can't do that if you don't have savings. You can't do that if you don't have assets. You can't do that if you're maxed out on your loans, or if you've got late payments, or any of that stuff that the average American has going on, which is why when these opportunities do happen, so few people actually get to take advantage of them. Because the entire time before that, they were living like they were in retirement and it was a party, and they weren't saving and they weren't earning and they weren't being economically smart and they were being financially illiterate. And then they got smacked upside the head by the recession, and now all of a sudden the world's about to end and everyone's panicking. It doesn't have to be like that, guys. Like, if it's like that, and this is going to be blunt, but if it's like that, it's due to your own stupidity. It doesn't have to be that way. If it's due to your own stupidity, then change it. Start being smart. Start doing the things we teach you. Okay, but if you continue like, you know, oh, I have a mortgage, so the that's the world people live in. My house is nice, so the recession can't happen. I've got a good job, so I don't think there's going to be a recession. My 401k went up, so everything must be okay. It's Alaska, and we're about to get permanent fund dividend. Dude, there are freaking weather reports that said, and that's why people prepped and got ready and got prepared, because they knew there was going to be a hurricane. And they still got hit, and people are still struggling right now. You're about to have that happen economically if you don't do something different. And if you know this information and you don't act on it, like, I can't help you once it happens. You can't help yourself once it happens. It'll be too late at that point. So, moral of the story, guys, a recession is going to happen. It's on its way. Okay, in Denmark, they're having negative interest rates. It's projected that soon in the United States, we're going to have the same thing. That can be a beautiful thing for you as an investor if you're smart right now and if you do the right things right now. But if you don't, it's going to be a miserable thing, and you're going to lose a lot of money and a lot of stuff. And it doesn't have to be that way, but that's usually how it goes. So real quick, guys, if you're watching this morning, I want to give you a really quick link that I'm going to drop in the comments for you. It's a membership site that I built called jerryfetta.com/recession. And in this site, it's going to give you a 9-course training series on how to handle recessions. Okay, so the first one is going to give you, you know, the 3 asset classes that you need to be aware of in a recession. Because some of those you want to have, some of those you want to avoid, and some of those you want to kind of maybe diversify into during a recession. But if you don't know what they are, then you're not going to be able to. So the first course is going to teach you about that. It's called correlating, non-correlating, and inversely correlating assets. The second course actually is going to be a breakdown of the last 5 recessions. Okay, it's going to look at the market corrections that happened. It's going to look at who made money and who lost money. And the benefit of that course is, as an investor, you're going to have an understanding of what happened last time, and you'll be able to better prepare for what might happen this time as well. The third module in that course is going to be a 4-point strategy for you to come out of the recession profitable. Okay, and it goes like this. Save as much money as you can in the sacred account. Number 2, handle your debt. Number 3, invest in inversely correlating assets. Number 4, qualify for very low interest rate debt or negative interest rate debt and use that to acquire assets. That's what we're looking at as a strategy. If you do that, you're going to come out just fine. If you don't do that, I can't say you're going to come out just fine. I know you're probably not going to. So if you want to check that video out, that's a free course. Again, go to the link in the comments or jerryfetta.com/recession. There's no obligation there. You do not need to enter a credit card number. There's no monthly subscription. Just hit the button, create your profile, sign in, and enjoy the content for free on me. I appreciate you guys. Make sure you like, share, and subscribe. I'll be talking to you soon.